Asia-Pacific markets are surging. South Korea's Kospi just hit an all-time record. Hong Kong's Seng is at its highest level in nearly 4 years, and investors are cheering on Wall Street's gains as Federal Reserve rate cut hopes grow. But it's not all good news. China's inflation numbers are raising eyebrows. Let's unpack what's driving this rally, region by region. Today, we'll cover why markets are betting on Fed rate cuts, how Asia's major indexes performed, the big data points out of China, South Korea, and Indonesia, Apple's ripple effect across Asian tech suppliers, and what this means for U.S. investors watching global markets. Overnight, all three major U.S. indexes closed at record highs. The S&P 500 gained 0.27%, settling at 6,512. The Nasdaq Composite climbed 0.37% to 21,879. And the Dow Jones Industrial Average rose 196 points, closing at 45,711. Investors brushed off weaker jobs data and are now fully focused on Federal Reserve rate cuts. Traders expect lower borrowing costs in the months ahead, fueling optimism across Asia markets that opened hours later. China posted weaker-than-expected inflation data for August. Consumer prices fell 0.4% year-over-year, sharper than economists' forecast of a 0.2% drop. That's raising concerns about sluggish domestic demand. Meanwhile, China's Producer Price Index, often seen as a gauge of industrial health, fell 2.9% year-over-year, which was in line with expectations but still points to deflationary pressures. Yet, Chinese markets stayed positive. The CSI 300 rose 0.46%, and Hong Kong's Hang Seng Index jumped 1.35%, with tech stocks leading the way. Alibaba shares added 2.1%, hitting their highest in nearly 4 years. The boost came after Chinese humanoid robot startup X Square Robot raised $100 million in a funding round led by Alibaba Cloud. The Hang Seng Tech Index also rose nearly 1.8%, reflecting investor appetite for Chinese tech even amid broader economic uncertainty. South Korea's Kospi index surged 1.75% to an all-time high of 3,317. That's its seventh straight gain. The country's unemployment rate ticked up slightly to 2.6% in August, but investors shrugged it off. Tech momentum also played a role, with Samsung Electronics shares rising 1.4%. The small-cap Kosdaq index added 0.5%. In Japan, the Nikkei 225 rose 0.72%, and the broader Topix climbed 0.53%. Investors there remain cautiously optimistic, tracking the global rally. In Australia, the S&P/ASX 200 added 0.35%, supported by gains in resources and financials. India's Nifty 50 rose 0.56%, while the Sensex gained 0.54%. Indonesia's Jakarta Composite Index bounced back by 1.06%, recovering from a three-day losing streak. This came after political turbulence earlier in the week, when President Prabowo unexpectedly dismissed Finance Minister Sri Mulyani Indrawati. The Indonesian rupiah also stabilized, rising 0.15%, after dropping over 1% previously. Apple's new iPhone 17 event had a knock-on effect in Asia. Shares of suppliers like Foxconn rose 1.2%, and Samsung Electronics gained 1.4%. But ironically, Apple's own stock slipped 1.5% in New York, with investors unimpressed by the updates. For U.S. investors, Asia's rally underscores just how interconnected markets are. Fed policy expectations in Washington are lifting confidence in Seoul, Tokyo, and Hong Kong. But weak data out of China is a reminder that global growth remains fragile. So, do you think the Fed will deliver the rate cuts markets are betting on? And how will China's deflation risk weigh on global stocks? Drop your thoughts below. Don't forget to like, subscribe, and hit that bell for more updates on global markets and the U.S. economy.